Self-Directed IRA weekly webinar. Today we'll have Miss Anne-Marie Rogers, our sales director, going over the very powerful and beneficial Roth IRA. But first things first, just a few housekeeping things from myself. My name is Logan Onda. I'm an IRA specialist here at Quest. I've spent about 5 years at Quest working throughout a multitude of departments. So I feel like I got a good idea of what's going on here. But I like to be used as a resource for you guys. I'll be in the chat box all day. So you guys just bounce your questions off of me. I am more than happy to help you guys out. So let's get started. Who is Quest Trust? We are the largest self-directed IRA custodian in Texas. We have about $2 billion in assets under administration and also $350 million in undirected cash. So there's a lot of money sitting here with us looking to be invested, finding investors. So that's why we run this education, so you guys can meet each other and hopefully get some business going. Quick disclaimer, Quest does not provide any tax, legal, or investment advice. So everything that we will be going over today is strictly for educational purposes, okay? Moving on, what is a self-directed IRA? A self-directed, it's really just a marketing term. It's made up. Really, there is no legal distinction between a self-directed IRA, like an IRA held at Quest, or an IRA that's maybe held at like Fidelity. The true difference is what we allow you to invest into. Over at Fidelity or some of these more traditional custodians, you invest into stocks, bonds, and mutual funds, things that are publicly traded. Here at Quest, you invest into more non-traditional asset types like real estate and promissory notes, and even investments into private companies. And when you do that, a lot of benefits come with that. One of which is diversification. I would argue that if all of your money's tied up in your 401k and the market crashes, that thing's going to get cut in half. So I would argue if you move some over to the self-directed world and put it into real estate, if that happens, you're not getting hit, with the same cut that you would if you're all in, the publicly traded side. You also get the tax savings. You guys are real estate investors yourself. So if I go out as an individual, buy a house, fix it up, and sell it, I'm going to pay taxes on the income that I make. If I do that same thing inside of the IRA, the self-directed IRA, you do not pay the taxes on that income. So there's definitely a huge benefit with the tax savings. Social investing, you get to invest in your own community, and you're building up the community, rents are rising, so it's really another added benefit there is, you're helping out your community. And last thing I think is huge is you guys get to invest in what you know best. We're told to put our money in the stock market. I personally, I'm not very big time on the stocks. I don't necessarily know what I do. But I do know what I'm doing with real estate. So the self-directed IRA is a big benefit for someone like myself. We offer 7 different types of accounts here at Quest, all of which can be self-directed. We have the personal plans, which is the traditional IRA. This is really where most of America's wealth is. Just by default, typically a 401k plan from a former employer will roll into this account. So that's why that it's typically where most of America's wealth is. Today, Anne-Marie will be going over the Roth IRA, so I'll leave that one alone. We also have some employer plans if you're self-employed. They allow for, some larger contribution limits. The solo 401k can really be its own animal. If you're interested in that account, we can set you up a consultation and go through that. The specialty plans, we have the health savings account. We call it the best of both worlds. You get a tax deduction when you fund it. You can use the funds in there to pay for qualified health expenses and take a tax-free distribution for that. We also have the Covered Out Education account, which you do not get a tax deduction when you fund it, but if you use the funds for the qualified education expense, you can take those funds out tax-free. We have tons of different investment choices. We really boil it down to 3 transaction departments we have here. We have a real estate team. They work with your single family, your fix and flips. Maybe if you want to have a rental property, you would deal with that department. We have private entities, which is really mainly we see the LLC, like apartment complex syndication type deals come through this department. And we also have the promissory notes department. People like to use their IRA as a bank, kind of lend out to other people on their real estate investments. So we have a multitude of different options for you over here. And this is really what your timeline would look like with Quest. First things first is you would speak with an IRA specialist like myself. We'd go through a free consultation with you and we would get your account opened up. And then we look to fund it. So you fill out a transfer form with me, we'll contact your current custodian. And meanwhile, you'll be doing number 3, locating your investment. You go find the house you want, you go find the borrower you're going to send some money to, and you bring that agreement to us. And once we have the agreement, you fill out a very simple internal form, and then Quest will actually fund the investment for you directly. We also have our client portal. I would urge you guys, if you're a current client, to definitely take advantage of this resource. You know, you can pay expenses without having to fill out a form or any of that stuff and wait to get a check in the mail, all that good stuff. There's a secure document upload. If you don't want to email some documents over to us, you can submit your fair market valuations. A new thing for us, though, is you can actually fund investments from the client portal now. So I would urge you guys to go to, questtrustcompany.com, log into your client portal, and use that resource. Of course, we always offer tons of education. I'd encourage you to check out our YouTube channel, the Education Center on our website. We archive all of our webinars and stuff. You'll see all of that there. Virtual networking happy hour, the first and third Wednesday. These are fantastic. I personally am on these quite often. It's really fun. We have great conversations, so I'd encourage you guys to check that out. Of course, the weekly webinars like you're on today, every Tuesday and Thursday at 12 p.m. And Self-Directed Ira Saturday. We've been having a great outcome at Self-Directed Ira Saturday. Every Saturday at noon. So you guys go ahead and check that one out. If you guys got some friends, family that you want to refer over to Quest, we'll put $25 in each of your accounts whenever you do refer someone to us. I actually have a client that just really takes advantage of this. They don't even really pay fees with us. They just rack up those credits. So it works out very nice for everybody. So make sure you know that this does exist. If you got some buddies, send them our way. We're happy to help them out. And right now we're running our rewards program. So if you bring in about 100 to 300,000, we just will simply put 125 in your account. And you'll see the little threshold over there. We'll throw a little more in there, the more money you bring over here. So this is not only for new clients, this is also for existing clients. So it's just a good thing to know there, that 125 is also the price of our purchase fee. So if you're a new client, the first one could be on us. How do you get in touch with us? Guys, you can shoot me an email down in the bottom right. You can always go to our website. We have a live chat going. I'm on there quite often, so you might see me. And of course, always give us a call, 855-FUN-IRAs. Before I pass it off, if you guys want to hit that QR code, you can set up a free consultation with myself. But aside from that, I believe y'all can quit listening to me, and I will pass it off to our always nice and perfect Miss Anne-Marie Rogers.
Well, thanks for the introduction, Logan. Excited to be here with you guys today. As Logan said, my name is Anne-Marie Rogers. I'm one of our certified IRA specialists, and I'm also our sales officer. Also along with me today is who you just met, Logan Onda. Had the pleasure of working alongside Logan for, probably about, I think you said you've been here for about 5 years now.
I did 5 years, September 16th or something. So
okay, we're right around the corner then. That'll be good. Well, you guys are in great hands. Today I'll be doing the presentation about Roth IRAs, but Logan will be remaining on. He will be doing the chat. So as we go through, I see we've got a really nice crowd on today. If you have any questions, feel free to drop those in either the Q&A or in the chat feature if you're watching through Zoom. If you're watching through Facebook, he'll also be tracking that on there. So feel free to leave a comment or send a like or anything like that. Also, I love to plug some of the education opportunities that we have here at Quest. So if I mention an educational event or networking event, also can send a message for that, and Logan can connect you to where you can register and attend. With that, I'll go ahead and share my screen, and we'll kick it off with one of my very favorite topics. At Quest, we have 7 different accounts that we offer, but of all of the 7 different accounts, I think probably one of my favorite ones to talk about is, of course, the Roth IRA. This is one of the most popular, most widely talked about type of account when it comes to self-direction, because all of the wealth that is accumulating from the investments that you're doing in this account is returning back into the account, and you're not paying any type of tax on that. Now, in comparison to, for example, a traditional IRA that we'll talk about a bit today, the major difference would be that with something like a more traditional style account, traditional IRA, rollover IRA, your 401k, typically one day when you start taking those distributions out, unfortunately, you will have to pay some taxes on those distributions. That's the beauty about a Roth IRA, is that all of your wealth is accumulating in there. For one day, you're able to take that out completely tax-free. Now, this class is relatively new for us here at Quest. And as I was putting it together, obviously we got a lot of feedback. People wanted to know more about the Roth IRA. It's kind of the most attractive, sexy account. Everybody wants to talk about this one, especially real estate investors, because you can have such rapid and exponential type of growth. So why not be doing it in a vehicle where you're going to have that tax-free benefit, right? It's kind of a no-brainer. If you're a real estate investor, you probably need to be adding this into your portfolio. And so one of the things that we've frequently heard is a lot of times people will think self-direction and they'll think Roth IRA, and that's the same thing, and that it's synonymous. But as I said, and what we'll briefly talk about today, is that truly there are many, many different types of accounts, Roth IRAs just being one of the options that you have at your disposal for your alternative asset investing. Now, the class today is called The Secret Weapon to Being Wealthy. And I'll be honest, as I put together the class a couple months ago now, I kind of was mulling over what, we wanted the the title of it to be. And we kind of went back and forth. We're like, do we want it to be The Secret Weapon to Becoming Wealthy, or The Secret Weapon of the Wealthy? Because if you've been watching the news or reading articles lately, obviously Roth IRAs have especially been in the media, what with the co-founder of PayPal, Peter Thiel, that it came out that he had a $6+ billion Roth IRA. And so obviously that got quite a lot of media attention and people kind of digging in to understand how that would be possible, that he'd be able to have $6 billion in a Roth IRA and never have to pay any taxes on that. And of course, in the future, be able to pass on that wealth to future generations. So today we're going to be talking about how the Roth IRA can be utilized as a tool to become wealthy, to create wealth for yourself and be strategic in the way that you're paying taxes. But also we're going to be talking about how it can also be a secret weapon of the wealthy. I think a huge misconception around Roth IRAs is that, I'm a high earner. I've already made too much. I can't benefit from a Roth. And truthfully, we even hear this sort of thing coming from CPAs or other tax professionals. But today we're going to be sharing not only how, if you're just getting started on your journey, how you can utilize a Roth, but also if you are a very knowledgeable investor, a long-time retirement account holder, and maybe have believed that you cannot have a Roth IRA. We're going to talk about how anyone in the world can essentially bypass these sorts of rules, be strategic, and utilize a Roth account. Really quickly about me, as Logan said, my name is Anne-Marie Rogers. I am our sales officer as well as certified IRA specialist. My certification is a designation through the Institute of Certified Bankers, specifically relating to IRAs. I've been with Quest for about 8.5 years now, worn many, many different hats in my time here, from being in the new accounts department to being the director of our marketing department. And now as our sales officer, I oversee our 10-person IRA specialist team that's really on the front lines, so to speak, in talking to the average American about how you can take control of your retirement and really begin investing in things like real estate, notes, private companies, just to name a few of the many, many things that can be done inside of these accounts. So a huge part of my job is, of course, like I said, talking to the average person about what they're doing and what they can be adding into their tool belt to improve their future, not only for themselves, but again, also potentially how you can pass on wealth tax-free to future generations. So we'll breeze through this part. Logan nicely already gave a great introduction and our disclaimer, but just a quick refresher for those of you that might be tuning in a little bit late is that Quest does not provide any tax, legal, accounting, investment advice. Everything I'll talk about today is just strictly for education purposes only. As you guys are aware, it's a self-directed IRA. It's up to you guys to self-direct it, right? You guys are the entrepreneurs, you are the business owners, you're the investors. Go out there, find your own deal, and come back to Quest so we can help you to process it within the account. But of course, we can't provide you any type of investments, advice. And so we always encourage you guys to consult with attorneys, CPAs, anyone on your power team prior to entering into any type of investment. Now, some of the things that we'll talk about today is first, why Roth IRAs were created, and really how are they different than maybe the more mainstream type of account that, as Logan put it, most Americans, they've got their wealth in a traditional IRA. So how are Roths different than a traditional account? And then, of course, we're going to talk about just the top 10, only 10, right? But we're going to be talking about the top 10 benefits of Roth IRAs. Truthfully, it's probably just the tip of the iceberg. There are so many tremendous benefits to this account, but we've narrowed down our 10 favorites that we'll share with you today. And then, of course, where you can find more information and education for free after this presentation. So what exactly is a self-directed IRA? For those of you that may be newer to this topic, self-directed IRAs are typically not any different than any other IRA that would be out there. Now, don't mistake that. There are different types of IRAs, and we'll talk about that in just a quick minute. But self-directed is essentially just a marketing term that's trying to get across the point that you're the one that's choosing the investment. The account itself is exactly the same. So a traditional IRA to a traditional self-directed IRA, or a health savings account to a self-directed health savings account, or a Roth IRA to a self-directed Roth IRA, it's the same account. It's exactly the same. How much you can contribute to it, what retirement age is, what the benefits of it in terms of taxes, all of that is standard. The only difference is ultimately in what the companies are going to allow you to invest into. So for me, as an example, I have a Roth IRA with Fidelity, and I like to invest in my stocks and my mutual funds and, my traditional style of investments. I also have a Roth IRA with Quest, where primarily I do note investing and private lending out of it. Those accounts are exactly the same. The difference is that at a company like a Fidelity, you're exclusively going to be able to do what's considered a publicly traded investment. And over at Quest, with the exact same type of account, you're going to be able to invest in what's considered a private asset. So things like real estate, things like notes, things like private companies, oil and gas, just to name a few of the many, many things that can be done inside of these types of accounts. Now, as I said, there's 7 different accounts that we offer at Quest, from the personal plans to the plans that make sense for people that are self-employed to our special plans that are designed for education expenses and health expenses to be paid for completely tax-free. I have a variety of these different accounts, from a traditional and a Roth IRA to a health savings account. And one of my favorite strategies is that you can, in fact, partner all of these together, or in other words, pool the money together, pool your resources together, and be able to do one investment with each of these having a different share in the deal, and then money going back to the different accounts for the different benefits. That's one of my favorite strategies to use personally. And it can even be something that you do not only with your accounts, but also that you can be doing this with accounts of perhaps your spouse, other family members, business partners, colleagues, so on and so forth. Each one of these really has a unique benefit. Personal plans are very common. Obviously, we'll talk extensively about the Roth today. We also have self-employed types of plans. So if you have that self-employment income, perhaps have your own business, these can be a really good option for you, and our special plans. If you're brand new and have not yet watched what we call our Self-Directed IRAs 101 class, I highly recommend that you drop a comment drop a message in the chat or the Q&A feature, or just visit our website, questtrust.com, so you can watch the Self-Directed IRA 101 class. It takes a really deep dive into the benefits and how each one of these plans works that we just don't have time to go over today. But we like to say it's really our foundational class that we recommend for every single person to watch prior to moving forward with self-direction. Now, as I said, all of those plans can be partnered together, which is what you're seeing here. This vesting is how your assets will be purchased. So remember, your IRA is its own account, and your IRA is going to be the one that's taking title to real estate, or buying shares in a private company, or loaning funds, perhaps secured by real estate. And so you're not distributing the money to yourself or taking a loan, but rather the IRA itself is actually taking title. It's actually doing the investment itself. And so it's important to remember that the buyer, so to speak, for the investment is going to be your IRA's name. So Quest Trust Company, for the benefit of your first and last name and the account number. Partner would be in the event that you decided to go the route that I mentioned, and maybe you utilized multiple different accounts. Really quick, we have a question on there. Are there any webinars for note investing? Yes, absolutely. Note investing is one of our favorite investments to talk about. We have a variety of different education opportunities. If you're someone that likes to watch a video, read an article, attend a networking or educational style of event, you name it, we have it on so many different topics, from things like note investing, to things like multifamily, to things like oil and gas investing. So we try to bring in a broad variety of speakers and topics to kind of educate you guys on the many different things that can be done in these accounts. And I believe Logan is checking out our website to send you some links directly for some upcoming webinars that might be good, focused on note investing. So moving right along, these are just a few of the common things that we see people invest into in their self-directed IRA. But truthfully, there's so many more things that can be done. These are just some of the most common ones, I would say, that we see. So let's dive in and talk about the Roth now for the next 30, 40 minutes or so. So, Roth IRAs were created in 1997. Prior to that, really the traditional IRA was the primary type of account that Americans were utilizing. And essentially the Roth IRA was created to diversify the benefits of retirement accounts. For those of you that are familiar with traditional IRAs, the benefits are that you get a tax deduction typically if you're within the threshold for income, contributing at your 401k, at work, all of those sorts of things. But typically speaking, you would get a tax deduction as you deposit money in a traditional IRA. And the benefit is that as you do your deals, your profits grow, and they're growing what's called tax deferred, meaning one day that deferment's going to end and you're going to have to pay taxes when you take that money out. Roth IRAs are kind of what I would consider the opposite effect. And you don't get a tax deduction when the money goes in. However, all future profits are going to be growing tax-free for you to take out. And so Roth IRAs really create a diversity in retirement accounts by having two separate styles of tax benefits that Americans would be able to benefit from and use. Also, there's a lot more flexibility in many different ways with Roth IRAs that often doesn't really exist with traditional IRAs that we'll talk about as we continue on. So what I said just a couple minutes ago about the benefit of the tax deferred and tax deductible style of account versus your after tax and tax free Roth IRA, this is exactly what it's explaining here, just in kind of a visual format for you. So for your traditional style of account, that's kind of what you're seeing here. You get your tax benefit today, you get your deductions as you're making your contributions into the account, and then eventually when you take your distributions, the hope is that when you're taking your money out in retirement, hopefully you'll be in that lower tax bracket at that point. and then therefore paying less taxes. Now, that often doesn't happen for people. More and more we see people's tax situations and strategies changing. Taxes often, when we talk about them, people are like, well, do you think they're going to go up or down? Well, we don't know, right? We don't have a crystal ball, but logically, it seems that they may continue to increase. And so for a lot of people, having a Roth IRA can, to some degree, kind of hedge your bets, because you're not going to have to worry about if taxes increase, because all of your taxation has been done up front when your money enters the Roth IRA, not when it's leaving. We'll talk about what you would need to do in order to take completely tax-free distributions from a Roth as we continue on. But the idea is that you pay taxes up front, perhaps on the acorn, and then you grow this huge money tree that's completely tax-free for you. So let's talk about some of the major benefits. And as we go, if you guys have any questions, comments, again, feel free to drop them in the chat, or if you're watching through Facebook as well, in the comments. The first benefit that I always like to talk about when we discuss Roth IRAs is that anyone in the world can have a Roth IRA. We hear this objection all the time. And we even, sometimes we'll hear people, call us and they'll say, well, my CPA said I can't have a Roth IRA. How can that be? You guys say that I can. So let's talk about that. The chart that you're seeing here would seem to agree with this objection that if you make too much money, you can't have a Roth IRA. Because what it's saying here is if you're married filing jointly and you're making higher than about $200,000, then you can contribute 0, or married filing separate 10, or single 135. So how can that be? Well, the answer is that your CPA, or what you've been told, is kind of half true. It's true that if you make higher than what these income thresholds are showing here, you cannot directly contribute into a Roth IRA. That being said, there's essentially what you'll call a loophole, oftentimes called the Backdoor Roth IRA. What this does is it allows anyone to be able to have a Roth IRA by kind of a two-step process. So if you maybe with a Roth IRA, if you already have an existing account, a traditional IRA, a 401k, a 403b, a pension, you are able to convert that over into a Roth IRA. Or if you are looking to add new funds into it, you'll have to do a two-step process. So how does this work? A little bit of background is, so it's true, if you do make higher than those dollar amounts that we saw on the previous slide, you cannot directly contribute to a Roth. However, close to a decade ago now, what happened was the income limit was lifted for doing what's considered a Roth conversion. A Roth conversion, all it is moving money from a pre-tax account to a post-tax account. So what's a pre-tax account? Any of the ones you're seeing here: traditionals, SEPs, 401ks, 403bs, pensions. Typically, any type of work-sponsored plan that you would have are going to be pre-tax accounts. And what changed about 10 years ago now is that the income limit was lifted, allowing anyone in the world to be able to do a conversion. So while you can't make a direct personal deposit into a Roth IRA, if you already have one of these accounts, you can absolutely do a conversion of all of the funds or just some of the funds into that Roth IRA. Alternatively, if you're someone that's saying, well, man, I really want to put additional funds into it, how could I do that? You can always make a contribution into a traditional IRA, no matter your income. Now, caveat, you might not be able to get a tax deduction on that if you are a high earner, but you can still put the funds in. And then once again, now you're going back to this step and you're doing a conversion. So either by a two-step process or just directly by converting your traditional 401k, things of that sort, into a Roth IRA, you can bypass these sorts of rules and begin creating tax-free wealth for yourself inside of a Roth IRA. Now, I always have people that will then stop me and say, well, hold on a minute. What if I do a conversion? Don't I have to pay taxes? If a Roth IRA is an after-tax account, then don't I have to pay taxes when the money goes in? You would be exactly right. So it's important to consult with your CPA, with your tax advisor, and take a look at your personal situation, because you do have to pay taxes on the amount you convert over. That being said, you don't have to convert the full balance of your account. So if you're someone that has a $500,000 401k from your previous job, it probably doesn't make sense in 1 year for you to convert that full thing, because you're going to have to pay taxes on that. Instead, perhaps you do 50,000, 100,000, whatever it is that would maybe keep you within your tax bracket or that you're comfortable with, that you can pay taxes on. However, all future profits, remember, all future profits are then going to be tax-free. Some of the things to consider: can you afford the taxes, and how will you pay them? Will you pay them personally or from the IRA? There's absolutely pros and cons to doing either. Is it the right timing? If you're going to have a personal situation change, maybe your tax bracket will be, increasing, decreasing. If you're leaving your job, retiring, that could be a good time to do a conversion. And is it worth it? How long do you have to grow your money tax-free? And what type of investments are you going to be doing in these types of accounts? We actually have a great class where we focus specifically in on Roth conversions, the pros, the cons, different recommendations or suggestions based on what we've seen other people done. If you're interested in watching that, again, you can go to our website, questtrustcompany.com, or Logan can connect you and you can watch that. But it is located on our website, and it really takes a deep dive into the many different considerations for doing Roth IRAs or Roth conversions specifically. All right. The second and third benefit is that contributions to Roth IRAs can be withdrawn at any time. So at the very, very beginning, when we first talked about Roths, I mentioned that they really offer a lot of flexibility that the other plans don't necessarily offer. This is exactly what I'm talking about. Any personal deposits that you make into the Roth IRA, those can immediately be withdrawn with no taxes, no penalties, and used for any purpose. So in other words, if I make a contribution of $6,000 into my Roth IRA, I could take that $6,000 in the Roth and I could invest it and I could make tax-free profits. Good. But if I put that $6,000 in and next week I turn around and I have a personal situation where I really need that $6,000, you're able to withdraw those funds at any time for any reason, tax and penalty free. So it's really a no risk type of situation, because in some ways it's kind of like a glorified savings account. You can put the money in, you can take it out, right? No taxes, no penalties, but hopefully you won't need to take it out, and then you're able to invest it and grow it tax free. For this reason, a lot of times Roth IRAs can be marketed to younger people or first-time retirement account holders, because it does give them the flexibility that they can be saving, they can be investing, but if they need the funds, they have the ability to access them, which traditional IRAs just don't offer. Contributions are also allowed at any age. The one caveat to that is that you do have to have income. You have to be able to show some type of income in order to be able to qualify to make a contribution. But no matter what your age is, if you do show income, at least in the amount of $6,000 to $7,000, then that's what you're going to be able to contribute. So definitely a nice perk that you're not cut off at any age. Benefit 4 segues really, really nicely is that not only are you not cut off at any age in making contributions to the plan, but you're also not required to take distributions from the plan. With traditional IRAs and the pre-tax types of accounts, eventually, once you get to the age of 72, might have heard that it was previously 70 and a half, but it kind of recently got switched to 72. But Because you have yet to pay taxes on these funds, you're required with something like a traditional IRA to begin taking distributions out and paying taxes on those distributions. Roth IRAs don't work that way. You never are required to take funds out of the account. You never ever have to take minimum distributions. So a really nice perk in that you're able to, again, continue contributing and you're never forced to start taking money out and depleting it. It can continue growing in there throughout your entire life. And the biggest benefit of all, in my opinion, and why people pursue it, especially in real estate, is because of the tax-free distributions in retirement. Again, the biggest benefit to Roth IRAs is that all of the profits that you're accumulating from your investments are all returning back into the Roth IRA, and you're not paying any taxes on that. You're not paying any taxes on that. Now, it's important to be aware that there's kind of what we call an order or a sequence of how the money comes out of the Roth IRA when it does come time to take distributions. When you go to your Roth and you want to take funds out, there's a very specific order that they come out. The first being contributions, which we talked about being tax-free and penalty-free for any reason. The following category that you'll deplete is all of your conversions, which remember is funds that you've moved from a pre-tax account into the Roth IRA. Now, typically with these, you do have to leave your converted amounts in the Roth for 5 years minimum to avoid a 10% penalty. In other words, if you're going to need the funds before 5 years are up, it might not make sense to do a conversion because ideally you don't want to be losing that 10% because you needed the funds before the 5 years was up. That being said, you can access them. You would just have this 10% penalty when you would take that distribution of them if the 5 years wasn't met. Last but not least is the big thing we want to talk about is all of these tax-free earnings that you've accumulated in there. For really savvy real estate investors, you could have very significant amounts that you're earning in there. And as long as you wait until you meet both of these qualifications, all of that money can immediately be withdrawn tax and penalty free. Now, in order to do this, you have to have what's called a qualified distribution and meet both of these. So you have to meet having the account for 5 tax years and one of the following. Typically, it's going to be 59 and a half, which is retirement age for IRAs, but it could also be 5 years and if you qualified as a first-time home buyer, or 5 years and you became disabled. For the average person, 99% of people, it's going to be the first two, 5 years and 59 and a half. Once you met both of those qualifiers, all of your earnings can be withdrawn completely tax and penalty free. So pretty powerful type of account, definitely. For those of you that may be at 59 and a half, or maybe you are a little bit younger than that, now is the time to set up your Roth account and make a contribution in there to get that 5 tax years going. What you don't want to happen is what I've seen happen to people where they hear about the Roth, they kind of have their analysis paralysis. They're like, oh, I got to talk to my CPA and my spouse and this person and that person and, see if it's right for me and maybe I'll do it. And, several years down the road, then they're like, man, I really wish I had done that. They end up setting up the account, but you still have to wait the 5 years, even if you're 59 and a half or older. So if you're close to that age or you've already hit it, now is the time to take action and set up the account. So you start having that 5-year clock ticking. As soon as you hit that 5 years, you can immediately start taking out your distributions tax and penalty free. One of the things that's not often talked about that could be a benefit for Roth IRAs is creating income diversification in your retirement years and locking in now, essentially. As I said, taxes may continue to go up. We don't know. We don't have a crystal ball, but you really wouldn't have to be considering that as heavily as perhaps other people that strictly have something like a traditional IRA or a 401k that inevitably you do have to pay taxes on that 100%. With Roths, theoretically, as long as you have had it for 5 years and you're 59 and a half, it doesn't matter if taxes go up or down because you're not going to have to pay them. Additionally, a lot of times, people will be preparing for retirement. They know they've got their retirement funds. They know they have some Social Security. Maybe they have a pension or some type of other residual income coming in, investment income, things of that sort. But when you take a look at all these different categories that we're talking about, what's the common trend that you see? Well, the common trend that you see is, for the most part, it's all going to be taxable income that's coming into you in retirement. By having a Roth IRA, you can be adding something in there that has tax-free in there. So yes, you're going to have perhaps your income from many of these sources that is taxable, but you'll also be able to pull from that Roth IRA tax-free in your retirement years. So really, you're able to have that true diversification planning in your retirement. You don't have to choose as well. I think a really big misconception is that, you can only have your 401k at your job, or you can have an IRA. You can absolutely have both. And we encourage you to take advantage of both. If your employer offers you a 401k and can, make deposits, do the matching 3 to 5%, whatever it may be, into your plan, take advantage of that. But also, you probably are going to need something in the self-directed space, because with most employer plans, you don't get a lot of flexibility in what you're investing into. And you typically can't access those funds until you would either leave the company or until you would retire. Roth IRAs don't work that way. You choose all your own investments, your profits are going in there tax-free, and you're able to withdraw the funds if you need them prior to retirement. Obviously, it's a long-term play. You ideally want to be able to leave them in there, but if you needed it, you could access it. So you can absolutely have your cake and eat it too. And even within your 401k, believe it or not, you have the ability to even further diversify by doing both a traditional and Roth component for your 401k. So a lot of people aren't even aware that with your 401k, you can even segment that off. Most people think 401k, and so they think pre-tax funds. But as you're making your employee contributions into a 401k, you can actually designate that you want them to be in a Roth 401k. Now, your employer's contributions are always going to be traditional or pre-tax. So it'll essentially, under your 401k, have two little categories or two components down here. All of your employer's money that's deposited will be traditional, and you can make your money Roth. What this means is that one day when you would retire, one day when you would leave the company, that you would be able to have traditional funds and you'd be able to have Roth funds. And so whether you were retiring or, if you're retiring, you have that diversification there. But if you're not at retirement age and perhaps you moved that into an IRA when you would leave the company, then you're going to have a traditional IRA and a Roth IRA and be able to invest in both, creating some money tax deferred and some money going back to the Roth that would be completely tax free. Benefit 9 is that, there are penalty-free distributions in some circumstances. Ultimately, these accounts are IRAs. They are retirement accounts. And so their purpose is for retirement, and it's kind of a long-term play, right? You're supposed to leave the funds in there growing, and it's your future nest egg. But one of the nice perks about these types of plans is that there's some very specific situations where you can actually take distributions out prior to being at retirement age. A few of the ones are listed here, though there are many more. But these are some of the ones that I think may be most applicable to people. If you have that, worst case scenario where you have very, very high medical expenses for yourself or maybe for your spouse, exceeding 10% of your adjusted gross income, you could tap into your IRA. Also, if you became unemployed, it's nice to know you have a little bit of a safety net in that you can pay for your health insurance premiums by taking money out of your Roth IRA without paying that 10% penalty that you normally would. Also, I think one of the underutilized and not very widely known things is that you can pay for higher ed. So college, postgraduate degrees, not only for yourself, also for your spouse and for your kids. So if you're looking to pad your kids' education, you can actually take money out of your retirement account to pay for that. If you're considered a first-time home buyer, you're able to take out up to $10,000 from a Roth IRA. I think this is one of the things that you could do for your kids, maybe if they're in high school, if they're in college, set them up with a Roth IRA. Have them be making small contributions into the plan. You can partner their plan alongside yours, have some profits going back into it. But this can be a great gift that you could give to your kids when they're starting at a young age, because by the time they get down the road and they're looking to purchase a home, they'll be able to tap into that Roth and take out up to $10,000 without any type of penalty to buy their first home. This is definitely something that could be beneficial. Obviously, buying a home right now is very, very costly. So it'd be nice for you to prepare them to be able to have that little bit of funds that they would be able to take out. And lastly is qualified reservist distributions if called for active duty, as well as many more that you can check out on the IRS website. Last but not least is benefit 10. You can leave your family a tax-free inheritance. With Roth IRAs, you're able to take out tax-free distributions throughout your retirement years and live off those funds. But with all IRAs, when you set it up, you do have to leave a beneficiary or who would get the account in the event of your death. One of the great things that you can do is to leave your Roth IRA funds to your family members, because they're able to then inherit those funds and set up what's called an inherited Roth IRA and be able to take those tax-free distributions from there. Depending on who you leave it to, they're going to have different options. If you leave your Roth to a spouse, they're the only one that has the option to just simply transfer it into their own. Versus if you leave it to children, grandchildren, other family members, friends, their only option would be to do an inherited Roth IRA. Of course, if they weren't looking to invest it and really just wanted to take the funds out all at once, they could certainly do that too and take a lump sum distribution, which would all, again, be completely tax-free. So you can really see that, of course, having a Roth IRA is beneficial for yourself, but it's also something that you can add into your estate planning and your preparation for leaving an inheritance to future generations. It's kind of a no-brainer that you'd want to ideally not be leaving some type of a burden to them, where they're going to have to pay tax on the funds that you leave them. By leaving your family members a Roth IRA, their inheritance would be completely tax-free. One of the other things that I'll mention on this is oftentimes we'll see people, that they have traditional IRAs, and as they get a little later in life, they may begin considering converting funds over, because however you leave your beneficiaries the IRA, they are unable to change that once you would pass on. In other words, if I left my family members a traditional IRA, they would not be able to later convert that into an inherited Roth IRA. No, it's an inherited traditional IRA forever. The way that they inherit the account, it'll stay like that forever. So it can be a legacy play to do a conversion, move the funds over into a Roth IRA so that you're leaving your family members, again, a tax-free inheritance, because they won't be able to change it unless you're proactive and you do that while the account is still in existence as your own. Now, you guys might be familiar with Susie Orman. She's kind of a financial TV personality, really kind of humorous show. She's a financial planner, and people will call into her TV show and, they'll give her a rundown. They want to do some, crazy sort of thing. They're like, I want to take a $20,000 European vacation, but I have $50,000 I'm in debt. Or I want to buy a brand new car or diamond earrings. And they call in and, she'll unpack it. What is your income? How much debt do you have? What assets do you have? What is it that you're looking to do? And she'll tell you, yes, you can afford it, or no, you can't. And it's really kind of a humorous, kind of crazy show. Anyway, Susie Orman also has a lot of books and education about financial planning, different strategies. And in one of her books, she has an example that I like to share on compounding interest. So everyone's heard of compounding interest. We're not going to get into what it is. This isn't a, college tax class. But this basically gives you a rundown of the importance of starting saving as soon as possible. So it gives you an example of if you were to contribute $100 a month into a Roth IRA, planning to retire at the age of 65, if you'd started at the age of 25 versus 35, look at the significant difference that you'd be able to have. Now, quick math will tell you that $100 by 12 months is only $1,200. As we learned, you can contribute between $6,000 to $7,000 into Roth IRAs. Now, let's say you weren't even able to do that, right? Let's say you were only able to contribute $450 a month into the Roth IRA, again, still retiring at the age of 65. It's so important to start saving, start investing as soon as possible, at the earliest possible age that you can. Because by the time that you would get to 65 years of age, with around a 6 to 10%, return on your investments, you could be standing to have maybe even upwards of $2 million. So you can really see that starting early is essential. Of course, we always get people on here that are like, well, I'm way past 25 or way past 35. Is it too late for me? It's never too late, but it is important to be strategic and aggressive if you are looking to grow your retirement and you haven't set one up already. The statistics about how many Americans have zero in their retirement account to just a few $1,000s is really quite shocking. And so it's so important to prioritize your retirement, getting older, thinking about the future, thinking about retirement. A lot of times people put that off and they try to kind of block it out because it maybe isn't the most exciting thing to talk about. We'd much rather talk about what we're going to buy today than how we're going to prepare that nest egg for the future. But it's one of the most important things that you can do for yourself, for your spouse, and for your family is prepare for your retirement. And one of the great ways that you can do that is by being strategic and doing it inside of a vehicle where your growth is going to be in there tax-free for you. This is a quick case study that we have of one of our clients that did a conversion. He originally was going to do the investment in a traditional IRA, but ended up deciding to do the investment in a Roth IRA and converted $150,000 over into his Roth. He purchased this very, very, run-down eyesore type of property. It needed a lot of work, but he fixed it up for about $30,000. And believe it or not, just about 8 months later, he ended up selling the property for $239,000 and flipping it. It doesn't have the numbers on here, but it was less than a year later that he was able to do that. About 8 months total from beginning buying the property to fixing it up and selling it. So quite quick with the level of work that it needed to be done on there. So in the end, it was a profit completely tax-free of $94,000 back into the Roth account. So, the $150,000 plus the $94,000 all returns back in the Roth, no taxes are paid, and this investor could immediately turn around and do the same investment over and over and continue to create that tax-free growth in there. As I said, it doesn't actually have the dates on this slide, but this conversion was done in January of the year that he did that. The reason I bring that up is because remember, the tax year always is really going from January, right? You earn your income, you do everything until December, but you don't have to pay your taxes until the following April. Right? So if we're in 2021, I'm not going to have to pay my 2021 taxes until April 2022. So one strategy that's often talked about with conversions is doing a conversion at the beginning of the year, because you're going to have the longest amount of time that you could go out, do deals like this, make profits, make them tax-free, to be able to offset the amount of tax that you'll later have to pay in April of the following year. So it gives you that year plus that 4 months to be able to go out, do deals, make money tax-free, to be able to pay that tax bill if you don't already have it. So a strategy like that is just one example of the things that they talk about in specifically the Roth Conversion class that we also teach at Quest. Really, this class is supposed to give you at a high level all the different benefits of utilizing Roth IRAs, but obviously conversions is one of the components of that. So if you're interested in possibly doing a conversion, I highly recommend specifically the conversions class as a follow-up to this one to learn more about some specific strategies or things to think about, kind of like what we talked about with this one. So who should have a Roth IRA? If you're not already convinced, you should be, but if you're not, these are kind of some of the qualifiers to see if it's a good fit for you. If you have primarily taxable retirement income, you need to be diversified. We all hear this word thrown around so frequently, but it's important. There's a reason why it's mentioned so often. You need to be able to have both taxable and potentially tax-free income in retirement. Anyone still making earned income and wanting to save, it's a great vehicle to be saving in because as you invest it, your profits are growing tax-free. If you're a first-time retirement account holder, you're a young investor, you have children or grandchildren that you think could benefit from this, have them set up a Roth IRA. Remember, they have the flexibility that any money they put in, they'd be able to take it out tax and penalty free at any time. And anyone not needing the benefit of tax deductions on contributions, why not be putting those funds into a Roth IRA? Or anyone expecting a higher tax bracket in the future, if you're expecting a higher tax bracket, then you probably don't want all your money in a traditional IRA because then you're going to have to pay taxes at that higher bracket. Roth IRA is going to let you kind of hedge your bets there. Of course, if you don't want to be forced to take money out of your account, Roth IRAs are for you. You never have to take distributions out. You can keep putting money in there for as long as you have income, and you're never forced to take the funds out. Of course, if you're looking to make tax-free profits, which aren't we all, Roth IRAs are for you. Or if you're considering a legacy play and being able to pass on generational wealth to your beneficiaries, to your heirs, Roth IRAs are a great means to be able to do that. So what can Quest do for you? Don't forget, we process investments faster than anyone else. We're founded by investors for investors. The principals of Quest, founders H. Quincy Long, and the president of Quest, Nathan Long, are longtime investors. Myself, I'm a real estate investor. Most of our staff here are actively investing in self-directed IRAs in all types of alternative assets. And so we're constantly shaping the foundations of Quest, our systems, the modern advances that we have, from our client portal to being able to pay for things online to completely funding a transaction completely online. All of those things are because we understand as investors what you guys need, because we're investors too. And just to top it all off, we process investments faster than anybody else in just 24 to 48 hours. So it's a quick turnaround because especially right now, you got to be able to move quick in real estate. We hold all types of networking and educational events, which I'll remind you about in just a quick minute. I'll show you one of my favorite ones that's coming up. And we never charge any type of expedited fees. 24 to 48 hours is just our standard of service. And of course, we like to always, provide that fast, friendly service that people have come to know and love with Quest. Highly recommend you guys come out to our virtual networking happy hour. This is a great one if you're looking to potentially find deals or find money, or if you have money and you're looking to deploy it. If you have services to offer, maybe you're an attorney watching, you're a CPA, you're a realtor, insurance, whatever it may be, these events are a great opportunity to strictly network. We hope to be able to bring them back in person, but for now we're being COVID safe and they are virtual. Every first and third Wednesday of the month, come out, they're free, grab a glass of wine, come network, chit chat, see what other people are doing, and maybe even be able to find some potential deals as well. Now, I hope you guys enjoyed the presentation. This is really just the tip of the iceberg for the many, many things that can be done inside of these types of accounts. We'd love to chat with you. We offer free consultations with our certified IRA specialists here, myself included. I'd be happy to sit down with you, whether that be by phone or Zoom or even in person in our Houston corporate office where I'm located. Of course, we also have a chat feature if you'd like to chat online, or you can call us at 855-FUN-IRAs. For those of you that might be wanting to chat a little bit more about your personal situation, kind of dig in a little bit and talk about what accounts you may have or may want to move over, or how investing in real estate works in these accounts, I recommend setting up a consultation. You can do that by one of two ways. You can send me an email right here, AnnMarie@questtrust.com, or we've got our QR code here. You guys are probably familiar with it. A lot of restaurants are doing it, lots of different places now. What you can do if you're not familiar is take out your phone, go to the camera and hold the camera over this QR code and click on it. It will bring you to a page where you can schedule either a 15-minute quick consultation or a 30-minute consultation, where we'll be able to chat again about all the different things that I talked about today, as well as your personal situation for when you're ready to move forward with a Roth IRA. Also, we've got some great promos that are going on right now. Those are rapidly coming to the close. We love to do promos at Quest, but we kind of typically do them at different periods of the year. So the summer is coming to a close. Kids are going back to school. So at the end of August, we are going to be doing away with the promotions we have going on right now, which, just to name a few of them, we're waiving account opening fees. It's normally $100. Right now it's free if you get your account in before the end of this month. We also have great promotions going on for those of you that are moving in funds. We have the ability for you to even earn up to $500 in account credits, well and truly covering several of your investments and your admin fees for the first year. So take advantage of those. There's no time like the present. Everybody should be benefiting from a Roth IRA, because no matter where you're at in your investment career, no matter where you're at in your life, everybody should be benefiting from tax-free growth. So thank you guys so much for having me today. It was a pleasure chatting with you. Feel free to reach out again, either by setting up a consultation with the QR code or just by sending me an email. We can sit down and schedule some time to chat. Thank you guys so much. Hope you have a good rest of your week. Happy Thursday. We're almost to the weekend. Bye guys. Have a good one.